Hey everyone, welcome back to Corporate Decoder. Today, Ryanair Holdings plc RYAAF filed its annual report for the 31st of March 2026, and I am seeing some serious resilience that might surprise you. Quick note, this is not financial advice, just my take on public filings for educational purposes. While fuel prices are up and some things are getting more expensive, Ryanair is showing impressive strength, and their strategy to deal with economic ups and downs is key. Alright, let's dive into this massive filing from Ryanair Holdings plc, the company that just keeps flying. They've submitted their annual report for the fiscal year ended the 31st of March 2026. This report covers their performance up to the 31st of March 2026, and as a large accelerated filer with the SEC, they are giving us a very detailed look under the hood. Their American depository shares, or ADSs, trade under the symbol RYAAY on the Nasdaq stock market, which is pretty standard for international companies raising capital in the US. And yes, they are a well-known seasoned issuer, meaning they are a big player in the market. They're also firmly in the large accelerated filer category, which shows their size and consistent reporting. Now, what is really important for understanding Ryanair is that they prepare their financial statements according to International Financial Reporting Standards, or IFRS. This is common for European companies and gives a consistent global view. Let us look at the financials. In the fiscal year ended the 31st of March 2026, Ryanair brought in $17.9 billion in total operating revenues. That is a jump from $13.9 billion in 2025. On the flip side, total operating expenses also went up, but not as much. They were about $15.1 billion in 2026 compared to about $13.1 billion in 2025. This is where it gets interesting. They managed to boost their operating profit significantly from $2.7 billion in 2026 to about $1.5 billion in 2025. That is a really strong improvement. And for the shareholders, that means earnings per S-share went up sharply too. Basic earnings per S-share were $2.37 in 2026, that is up from $1.46 in 2025. Looking at their financial position, as of the 31st of March 2026, Ryanair has cash and cash equivalents of $3.1 billion. That is down from $3.8 billion in 2025, but still a very healthy amount. Remember, these numbers are euros initially and then converted to dollars, so there might be slight differences. Their debt levels, including lease obligations, also came down from $2.6 billion in 2025 to about $1.7 billion in 2026. That is good to see them paying down debt. And their shareholders' equity, which is basically what the owners have in the company, also grew from $7 billion in 2025 to $11.6 billion in 2026. This shows a financially stronger company. Now, let's look at some operational numbers. Their operating margin in 2026 was 15%, which is fantastic. It was 11% in 2025, so they made a big jump in profitability. The break-even load factor, which is the percentage of seats that need to be filled to cover costs, was 80% in 2026. This means they are filling a lot of seats to cover their expenses. And good news on passenger numbers, they booked 208 million passengers in 2026. That is more than the 200 million in 2025. More people flying means more revenue. Their booked passenger load factor was a super high 94% in 2026. That means almost every seat was filled. This is a key part of their low-cost strategy. Now, about the risks, one major concern for Ryanair is whether they can keep increasing fares to cover rising costs. They operate on a low-fare model, so controlling expenses is critical. Fuel costs are a huge factor for any airline. The report mentions that oil prices increased significantly in March 2026 due to conflicts in Iran and the Middle East. Even with hedging, Ryanair is exposed to these price swings, and any disruption to shipping routes can make things worse. This is a big risk they're constantly managing, and as you'd expect, they operate in a very competitive market. Lots of airlines low cost, and traditional ones are all vying for passengers. They mention that some competitors are state-owned and get subsidies, which can make things tougher. They're also planning to buy a lot of new planes, which involves massive costs. Any instability in financial markets could make it hard to get the money they need to pay for these aircraft. They have a big order for Boeing 737 MAX -10 aircraft, and this is a significant financial commitment. Then there is a complex issue about ownership. EU rules say an EU airline needs to be majority owned by EU nationals. Because of Brexit, UK nationals are no longer considered EU nationals for these rules. Ryanair has had to put restrictions in place to make sure they stay compliant, and this affects who can buy their shares and their voting rights. It is a bit of a balancing act to keep their operating licenses. Ryanair is also entangled in legal battles over alleged state aid at certain airports. The European Commission has been investigating these agreements, and some have resulted in orders to repay funds. While Ryanair has won some of these cases and is appealing others, this is a significant ongoing risk that could impact their strategy and operations with public airports. Let's quickly glance at the balance sheet metrics again. Their property, plant and equipment, especially aircraft, are valued at over 11.3 billion euros. This is their core asset base. They also have right-of-use assets related to leases, which add up to about 148 million euros. Adding it all up, their total non-current assets are over 12 billion euros. On the liability side, trade payables are around 609 million euros, and accrued expenses and other liabilities are quite substantial at over 6.4 billion euros. This often includes things like taxes and deferred revenue. It is great to see shareholders' equity at over 10.1 billion euros, reflecting that growing company value. Let's go back to the income statement. For the year ended the 31st of March 2026, total operating revenues were 15.5 billion euros. Fuel and oil costs, which are always a big factor, accounted for 35% of their total operating expenses. That is a significant chunk of their costs. Staff costs were 12% of expenses. Their operating profit margin was 15%, which is very solid. That means for every euro of revenue, they generated about 15 cents in operating profit. And after all expenses, taxes, and other things, they had a profit for the year of 2.17 billion euros. This is up from 1.61 billion euros in the previous year, showing strong profit growth. And as always, their financials have been audited by PricewaterhouseCoopers, who confirmed that the financial statements present fairly in all material respects, their financial position and cash flows in conformity with IFRS. One area that requires significant management judgment is the estimated useful lives and residual values of their aircraft. This is a critical audit matter for their auditors because it involves a lot of assumptions about how long planes will be used and what they are worth at the end. They use a useful life of 23 years and estimate residual values at 15% of market value on delivery, which seems reasonable given their fleet renewal strategy and industry practices. Overall, Ryanair is showing impressive financial health and strategic execution. They are successfully navigating rising costs and market complexities by sticking to their low-cost model, a strong focus on operational efficiency, and a disciplined approach to growth. Their ability to attract passengers at high load factors and manage their fleet effectively are real strengths. The biggest risks I see are still centered around fuel price volatility and increasing environmental regulations, which could add significant costs. However, their ability to manage these through hedging and fleet modernization seems robust. What I am really watching is how they continue to manage their debt while expanding their fleet. Their strong operating profit and shareholder returns are positive signs. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives.